Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar took the challenge back to the 73-cent handle overnight and once again got into some trouble around the 73.32 area. It is assessed that the resistance zone around 73.25 to 45 should continue as the bearish divergence is strengthening right across, as you can see here with the RSI dropping now to the midway point and the MACD is also declined. If this pattern does continue, then I do anticipate we should see a move down towards the region of 72.25 and a break there would give further extension to the bearish pattern and look towards 71 cents. The euro took the challenge to the upside also like the Aussie and failed and therefore saw the rejection of 118.95 like the three previous times and back towards the lower side of the range around 118. It is assessed that further weakness will be seen if we can get a break of 117.80. This should trigger a further decline down towards the 116 region. With the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounding about 40 points from 92.15 close to 92.50 has inspired the bearish case for the euro further. Later today we do have Christina Lagarde to speak, so no doubt we would see a little bit more movement maybe to the euro into tonight in the European session. Dollar yen has fallen further since the rejection of 105.50.55 and crushes the level of 104.20 and now reaches upon the level of 103.60.65. I do anticipate there is a little bit more weakness as the trend is still strong. The ADX is still made up, the ADX as it climbs, and also the RSI is married up to the MACD and therefore look towards 103.13.15 area and therefore could see a rebound. So if you are trading from the short side, can still continue to monitor your stop losses and take profit according to your risk management in case we do get a snap reversal, as the yen strength has pushed the market down and likely to until we reach its target, like where we saw a very strong rejection from 103.15. So do keep your eyes upon that level if we get down there. Sterling took another stab to the upside but failed to sustain above 132.95. With the bearish sentiment coming back into play, the market may actually see a little bit more slippage into some numbers that are coming out tonight and therefore could see a fall towards this region, somewhere around the 131 handle. The technicals haven't quite broken down, but near enough in a prime position to stage a further decline if the candle does extend itself towards the lower side of the range of 131. After at least 4 days of consolidation and of rejection from the break level of 139, or called more to the point, the trigger level to support the shooting star candlestick, is the Japanese candles are still remaining bearish and still from the point from sterling yen looking towards the level around 135.90. We have a negative RSI and nearly married up to the MACD, does put the case favourable to the downside. Looking at the gold, my call is still negative, even though we are respecting the level of 1,860. I still feel from a technical point after this recent rejection, close to that 1,900, that we could be looking at 1,848 to 52. Now a close under there will give it a 100-point fall to a measured move, that is, of around 117.50. So do keep your eye on that level around 1,848 to 52. And immediately at 1,860. And wrapping up with oil, the market continues to try and step higher but fails and still at this case lags technical support to any bullish case beyond $42 a barrel, with the cap still seen close to this level around 43.80.90. Now if the pattern does continue to fail, then the bears will step in and no doubt take the market back to 38.60 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.